Hello traders, thank you for joining us on our Sunday's market preparation video. This is Mandla here at FX Link. In today's video, we are going to talk about the complex pullback, and we are going to see a trend continuation opportunity on the Euro-Aussie pair, explaining exactly this particular wave in the market. Now, without further ado, let's just jump right into the charts and I'll see you there. Hey gang, as I scrunch up my charts, as you see, we have been going up for quite a while now. Okay, now as we have been going up, we have a series of higher highs, higher lows. Let's start from this high low right here. We went up, came back, had a higher high, higher than this previous high right here. Okay, we have a retest of those lows right here. Then we have a higher high, then we have a retracement, excuse me guys, we have a retest followed up by an extension, then now we are retracing back to these levels of structure, previous resistance right here. Okay, now as we have been retracing back to our previous resistance, my initial kill zone would start from this previous resistance right here, and if price doesn't break these lows right here, then we still have a valid buying opportunity in this zone right here. Now my question would come to the risk to reward, okay, because I have no intentions of taking a conventional trend continuation trade, which is a trade of take profits in anticipation of an extension of a move. I'll be mainly looking for a retest of these highs right here, probably to the bodies of these highs right here. Okay, then as I look at my risk on this one, my risk has to be lower than this low right here. And as we take a look right here, this is probably a 1-to-1 risk to reward, and this is not quite favorable risk to reward for me, so I'll be looking for a much deeper pullback. So will I like this type of risk to reward? Yeah, we can try this. This looks like a 1:4 risk to reward, or 1:2. Let's check. Alright, yeah, this looks like a 1:2 risk to reward. A pretty good significant trade that I would take consistently in the market. So as I go to my lower time frames, to my 4-hour, okay, we have identified this kill zone starting from this high coming to this low right here. Price action right here has come to our levels of resistance right here, gave us a consolidation and imbalance in the market over right here. Okay, particularly just like the complex pullback, the market likes to move in waves, right? Price, after coming right here, could retest these highs right here, but looking at the risk to reward that I want to get into, if I enter right here, I have to have stops below this low, probably 10 pips, then high targets at those highs. That would give me a 1:1 risk to reward. That's a pretty big stop loss for me, which is 174 pips. That doesn't go within my bounds of my allowable risk to reward. So where's the level that I will be having a pretty significant risk to reward, where I minimize my risk and I maximize my reward? Okay, so we have two zones right here. We have this zone, okay, And this zone where the market is currently sitting at, which is somewhere right here. So from these two zones, I'm gonna take my Fibonacci retracement tool from this swing low right here to this swing high. You'd see we have a 32 retracement coming over to these levels of structure. We have a 50% retracement coming over to our previous support level. Remember, I said if price doesn't give us a lower low, lower close, lower than this low, we still have a valid buying setup right here. Okay. All right. What else do we have? I'm gonna have a Fibonacci extension from this swing high back to this swing low right here and back up to this swing high. You see we have a Fibonacci confluence of a 50% retracement with a 1414 extension right over there. Okay, I'm gonna have a ABCD pattern terminating over to our 1618 extension level, and you see it goes beyond, a little bit beyond that 1618 extension level, but it's okay. It terminates over to these support levels right here. Let's put a line over to these levels of structure. You see we have some structure looking left over right here. Okay, now as price has come right here, now you would see my risk to reward would be sucked down, okay, than if I enter over this 32 retracement. The risk to reward would be quite, it'll be okay. It's okay. It's a okay risk to reward, but I only have a 32 retracement, no Fibonacci confluence that are significant over right here. But as we look at this level right here, which is our previous support levels, okay, we have a 1414 extension lining up with a 50% retracement and a ABCD pattern terminating somewhere to these support levels. So we have three things terminating over one zone. So if I enter into this Fibonacci confluence, probably at that 50%, look at my reward, okay, automatically my reward would be enlarged. If I take my targets over to these resistance levels, then my risk comes over probably lower than this low. Okay, so let me take these out and put it right there. You would notice our targets would be 271 pips, which is over the long run, okay, and a risk of probably 30 pips, 60 to 80 pips on this particular trade right here. And on my RSI, when I bring my RSI back, you would notice we haven't yet been oversold, which gives me a sign that price still wants to be still has room to be exhausted. The next room would be our next level of structure, which is where we had our Fibonacci confluence at, which is our previous support levels right here. So if I get price action coming over to these levels of structure, you know what I would look for. I would look for a low, a retest of these lows, a bullish divergence on my RSI right here. Okay, after having a bullish divergence on my RSI, I would enter on a higher high, higher close with this type of risk to reward over there. Okay, with first targets, I'm gonna be conservative on this one, which means that I might be looking to enter right here, okay, with first targets of 146 pips and a risk to reward of 60 to 70 pip risk to reward on this one. I don't want to waste much on this particular trade, which would give me a 1:2 risk to reward, which is 73 pips for 146 pips worth of reward on my first targets. Most of the traders might wonder that why don't you buy right over to these levels of structure. Let me go up and explain right here. Okay, let's take a bullish trend. Let's say we are in a bullish trend, the market all goes up, all right, then retraces. We're gonna call this our starting point, okay. Then here we have our initial high, okay. Then over right here we have our retracement. Okay. In order for us to identify a uptrend, it's obvious that we need to have another recurrence of this type of pattern, which is we're gonna have a higher high. Okay, let's label this a higher high right here. Okay, then we are going to have a then we are going to have a retracement, okay, or a lower high, a higher low, or a higher low right here. Or you can call this RT, which is retracement, which is short for retracement, okay. And then we have an extension, which is our higher high. So we have our starting point to our high, retracement, extension, higher high, retracement, higher low, and extension on our higher high. Mainly if you are a trend continuation type of trader, you would want to have a look between this level of structure, knowing that if price does get into this level of structure, then we have a valid buying setup that could be met over these levels of structure. All right. Now that we know price could come to these levels of structure, what usually tends to happen is that as us as traders, as price does come to these levels of structure, we take a trade. Let's say our setup was met, and then you take that particular trade onto the upside. So your risk to reward would look something like this, okay. You would have your entry level right here, okay. Let's say you have your entry level right here, your targets are over right here, then you would have your stop loss over somewhere right here, okay. Now that you have a pretty good risk to reward, okay, right here we have this much of reward. If you take your trade in anticipation of a retest of those highs, you have this type of reward, then this type of risk on this one, which is 1:3 risk to reward. So price comes to your entry levels, then does this, then you feel good, right? Many traders feel elated when price looks to be going to their take profit level. So you'll be like, then what tends to happen is that most of the time price likes to complete a move and do a equal measured move right here. So price hit our entry levels, we anticipated a retest of these highs, then we got stopped out over to these levels. Okay, now we have our higher high right here. Okay, after having our higher high right here, we had our higher low right here. Then after having our HL right here, we had our retracement, our RT. All right, we have our retracement over right here. Then we have our new low right there. Have you ever done this? Okay, I did this in the past and it got me to lose a lot of money really quick. I would identify that, oh, price, another price gave us a high, a high low, a retracement, and a new low. I need to get into this. I would have my entries. Let's say price does something like this. It does continue off. Okay, price does do this. I would enter short right here. Okay, with similar stops. Okay, you would see I have a good risk to reward on this one. I'll be entering short in anticipation of a retest of these highs. And what tends to happen is that price hits to these levels of structure. It finally hits our anticipated levels of structure, which is our higher high right here, our previous resistance right here. Never noticing that price gave me a complex pullback right here. Okay, price usually does something like this, goes up, okay, gives us a straight pullback right here, or it could give you a pullback, a complex pullback to these lows right here, or back to these lows right here. It doesn't matter where it does give you a complex pullback. Knowing that if price doesn't violate these levels of structure, you need to be only looking to go bullish than bearish. I hope you liked this video, and if you did, go ahead and give it a thumbs up. Subscribe to our channel so you can have more of these videos lined up for you on a consistent basis, on a week-to-week basis, and share this content with as many as you can, So for me, Mandla, I'll see you on the next trade. Goodbye.